Good morning, good afternoon, good night, everyone. What a week, what a day, guys. How are you doing? James, do you want to start?
Yeah, we expected some short-term pain. The expression I used was sometimes you got to break a few eggs to make an omelet, but I didn't expect somebody to take a baseball bat to the refrigerator and smash everything. And that's basically where we are now. And a lot of experts in the place didn't realize the impact of the tariff warning, the subsequent tariffs, the subsequent tariffs. But I think where we are in the markets right now, the worst is probably behind us because the S&P 500 cannot fall 6% 3 days in a row. Historically, very unusual. So we'll see. But that's where we are. We're beginning to see some money coming in this morning as well into different assets. We're not out of the woods. Shout out to Rusted Woods. But, if you've come this far, all I say is do not panic sell the bottom because they're very close to a bottom, I believe.
Mando, how are we? We had a massive recovery like the last hour or so, last 2 hours.
Yeah. I think people have got to separate just normal volatility right now from we are so back. Like the market, I said it to one of the traders I work with, just that it just felt like it was ready for a little bit of squeeze. And you can have squeezes for like 10% on literally no news. Here, there seems to be like a vague headline of they may delay the tariffs, and there was something earlier about like a Fed meeting, which seemed to be a bit of a actually just like a regular meeting. So I think we're just going to see a very high volatility right now. People have got to get used to that. You've got to be prepared for it. I was completely taken aback by how the tariffs were done midweek. I was surprised. I do think it's interesting what's happened. It seems to be kind of popular with Trump's base, but not really with the stock market. And yeah, I think it's going to be a very interesting few months because I'm not too sure where the incentive lies for all these different people that are going to have to come to a negotiating table.
Yeah. Marty, what's your thoughts? What's happening?
Yeah, guys. I've been here the whole weekend. Yesterday we had a historic space. Watching the crashes live on the global markets was insane. Not much sleep, but I'm extremely bullish. I've never been more bullish. I think the resilience of Bitcoin and crypto through this market crash was something to behold. I even had Charles Hodgkinson on the space for hours yesterday with us just hanging out, and we were all admiring like where we've come from what we wanted, where we were in crypto to where we are now. And, Bitcoin would have dropped to 55,000 a year ago in the midst of that kind of global panic. And look at it, back at 79, 80,000 already. It's just unbelievable. I think we made it. As far as the whole week goes, I think the biggest takeaway I had was the people's absolute ignorance about what tariffs are. I think everyone was gaslit in the mainstream media to believe tariffs were some kind of external tax on other countries, when that is completely false. And the second narrative I thought was really astonishing is that people thought tariffs were new. They didn't understand that tariffs have been going since the 60s. And I mean, Obama put a 35% of tariff on China, and people didn't even know that was Democrats. It's not a political thing. Tariffs exist. It's part of the World Trade Organization. It's been proposed here as renegotiation of these tariffs to make it fairer. And it was made political and made into a narrative and used to flush the markets. That's in my opinion.
Yeah. I don't know much about tariffs either. I'm learning a lot. It feels like something to do with the old world where shipping goods. We're living in the digital world. So let's see. Should we look at the agenda before we go deeper into the topics? James, can you please pull up the agenda?
Sure.
Here we go.
So let's talk about Bitcoin and then let's go deep into the tariffs. Also, I'm not clear. It seemed like there was a rumor now. Is it delayed? Are the tariffs delayed or not? Then let's look at some poly-market odds. Tariffs, will they be removed? Will there be emergency rate cut? Will there be US recession? Let's discuss those topics because it's the top of everyone's mind. Let's talk about Saylor and MicroStrategy. Is MicroStrategy going bankrupt or not? Did Saylor buy last week when Bitcoin held up and so forth? what do we think about the stock market, the main scenarios from here, and then let's go deeper into the crypto market as a whole with the USDT, the Genius Act. Is it real? Will it be a problem? Let's look at the altcoins and opportunities in this carnage. And also, let's discuss how to relate to situations like this. Like James, you said just before we started here, for many, this is the first time they experience something like this. And let's see if we can share some insights how to survive a day like this, or a week like this rather. So if I can start with the Bitcoin price structure, then I'll give the word over to you. So I really want to recap a little bit here, because in a way this has, played out a little bit textbook technical analysis. We had this range, you all remember, if you listen here, from 90,800 up to about 106 or 109, depending if we count the wicks or not. That broke down in February. Trend turned down. We retested it one time, retest failed, second time retest failed, and we came into this downtrend. And from a technical analysis perspective, the target of this range breakdown and double top that confirmed here is the height of the channel. We can discuss if it should be logarithmic or linear scale and so on. But this was the target circle from the technical analysis, and today we hit that. We had hit the center of that target circle exactly. So it doesn't always work, but there was a distinctive bearish development in the price chart, with the range breaking down, double top, trend turning down, and now we have kind of reached that target. So that happened today. And then there was this big reaction back up. We joked a bit, is the DCA pump back, or what happened here? But that's really what has happened this couple of weeks. The trend turned down here already a month ago. So it's actually not new. It's just that I think most people thought that it wouldn't really play out, but it did. And now we've kind of hit the target. Will we reverse from here, reclaim this range, and shoot up on the upside? That's what we need to explore.
Yeah. And CTO, while you're there on the chart, pull up the 200-day and 50-day moving average. We just flashed a death cross as well. Now, yeah, a lot of people freak out when they hear death cross, but I've analyzed every single Bitcoin death cross over the last 14, 15 years. And half the time it works, half the time it doesn't. So don't freak out about the death cross.
No, exactly. I don't actually even use it. So I think it's nothing strange or unexpected that has happened here. And the question now is if we can find the bottom and start trending up again. But I think it depends a lot on the macro factors. Clearly, Bitcoin is steered a lot by the macro factors, though it held up much better last week than the stocks. Remarkably better. We'll come back to that again. So, yeah, should we start talking about if I share, if I can share this, the other one.
No, sorry. Juggling.
Yes, so maybe we should reload it. Will Trump reduce majority of tariffs before July? And earlier today, let's go to one day. Earlier today, like an hour ago, this was at 45%. Then it went up to 71%. When is this? Half an hour ago. And now it's at 55%.
Yeah, there was some fake news report, like Mando said. There was fake news that came out that said White House had suspended tariffs for 90 days, and then the White House came back and said it's not true. There was that little spark.
Okay, so that is debunked.
Yeah, tariffs are still going into effect. The negotiations are on progress, but there's no 90-day suspension.
And this is a crazy thing, right? And people get this wrong all the time. People think There's one magic button in Scott Bessent's office or Howard Lutnick's office that presses tariffs. Trump is the guy who gives out the message. The people behind him are the ones making the decision, and they just want reciprocal equity with different nations. Now, when you look at remove all tariffs, that's not how this works. It's a country by country negotiation. So far, by my count, Argentina gone to 0 tariffs. India are coming to the table to negotiate. Switzerland is as well. Taiwan is. Israel, Vietnam, Japan. Maloney's flying from Italy. Shout out to the Italians in the audience, if there are any, to negotiate tariffs. Starmer in the UK last night, apparently, you probably heard this, Mando. He said, yeah, I don't agree with this president of the United States guy, but however, this globalization is not working for the people. And he sees that loud and clear. So the UK is also willing to negotiate on tariffs. This is what we've said from day one. This is a negotiations tactic. And yes, you got to smash the refrigerator with a baseball bat to get the results. But the other thing that's happening behind the scenes, which is even more important, liquidity is coming. Rates are coming down. 10 years under 4%. Inflation is down. It's actually almost on the risk of becoming deflationary, which is not good. Oil is tanking. Eggs are down. Everything, the stuff that they said they were going to do, they have done. And I must say, I am very surprised how fast it all happened. So everybody, don't read the news. Look at the fundamentals. And this is short-term pain. I do believe 3 months from now, everybody will say, oh, I wish I bought more. It's always the same way. I wish I bought more during the day. But sorry, Marty?
Yep, that's what's going to happen. You're 100% right. Oh, I wish I bought more. I agree with you.
Yeah.
Do you guys feel that, we saw Elon Musk posting a bunch of posts about open market, global market, free market is good, and so on and so forth. Do you think that there is disagreement inside the team? Who wants to go first?
I'll take that. Yeah, Mando, you go.
Yeah, look, I'm not a big fan of these tariffs. I don't think they've been put in a way that I thought made that much sense. Because it's actually, if you go behind the numbers, it's less on reciprocal tariffs. It's more on trade imbalances and trade deficits, which has been kind of part of Trump's messaging throughout the campaign. But it's not necessarily, I think, what people thought he would enact in the way that he did. I think when people thought about reciprocal tariffs, they thought, we're going to go after the EU, we're going to go after maybe Japan, India, these places with big tariffs. And this is kind of what I thought it would be, 10 days ago. What it's actually come in and said, actually, if you have a trade deficit with us, we're going to put tariffs on you. For example, Vietnam has 45% tariffs now against it. Vietnam only has 3 to 5% tariffs against US imports. So it is not a situation of reciprocal tariffs by the nature of just tariffs. They've actually gone after trade imbalances. And that makes, I think, this is why markets have freaked out slightly, because they've gone, how can Vietnam even come to the table there and negotiate? It doesn't have 45% tariffs. So what's it got to say? And there's kind of a part of this is to do with just the idea that we need to re-onshore basically some of the manufacturing base of the US. It's not necessarily, it's kind of been lumped in with the tariff stuff that actually we want to get rid of trade deficits. Now that's actually quite a different economic argument. Let's just use a theoretical argument of rural places and urban places, right? You would assume that there will be trade deficits between two of those. Cities are probably going to always import more from rural areas than they export, and there's always going to be a trade deficit between them. And that's kind of the basis of some economics, that there is trade between countries and areas, and that leads to both becoming necessarily wealthier. Part of this has now been, the argument is that we actually need to do more of, let's say, the farming in the city. They're saying this has actually led to massive income inequality in these richer countries. And one of the better ways to get rid of this now is to try and close out these trade deficits rather than tax the rich in the US. I think Trump wants to continue with this. Honestly, I think he's like his base is energized by this. I don't necessarily think he feels like he needs to do a deal very, very soon. I think you can even hear the comments from Besson. He's like, this is going to affect people who own the stock market, but that's not everyone, and that's definitely not all of Trump's base. So I think we're in for a few. Like, this is not something that I think is going to get resolved in the next week or so. I think this could go on for quite a bit longer. I do think there are certain countries that will come to the negotiating table and which do have high tariffs, like the EU. We already spoke about, 5 to 20% common import tariff on various different goods. Like, yeah, there should be a deal there, and it's great if the EU does reduce their tariffs. But this has not just been an attack on retaliatory tariffs. It's been an attack on just general trade imbalances, and part of dealing with those is a solution to kind of deal with income inequality in the US. And if you actually read a lot of kind of the commentary coming out of his base, part of that is this: like we don't really care if big corporations go down. Like we want to re-onshore jobs. We want to fix kind of the income inequality in the US, which has been there for a long time, and that's why I think this could be a complex and more drawn out negotiating process than it has been in the past.
Yeah. Amanda, well said. There's another thing as well that some people miss too, and that is the element of hidden tariffs. It's not just tariffs. There's a lot of hidden tariffs all around the place as well. But again, I'll go back to what Scott Bessent said. He wanted to bring the 10-year down. He wanted to bring the price of oil down. He wanted to control inflation. He's done all of that in miraculous time. And the other thing that I do want to stress too, I think Stanley Druckenmiller said, this tariff stuff is the lesser of two evils. If it is going to continue, the trade deficit for the US has just gone down for the last 50 years. They have to fix it. Now, there is a problem to that as well, which is very cryptic. And this goes into your era digitalis, CTO. You have China now. China can't afford local labor. China are offshoring to Southeast Asia for cheaper labor. Do you think, the US will be able to make a $1,000 iPhone with their labor? No. What's needed is automation and bots. That's what's going to be critical for the future. So if a nation has to become competitive, they got to figure out how they equalize this cost of labor piece. That's the other big factor here too. That's why, bots are going to be so important in the future. So anyway.
But your original question, CTO, was do I think it's causing a slight division inside the actual Republican Party here? Like, I don't necessarily think that tariffs, that it's not like it's not necessarily like a free market policy. This, like, if you generally would assume that, like, often right wing is more free markets, super competitive. This is slightly different to that, and I think that is causing slight. You can already see it's causing slight tension there. Like, is this kind of what we want to do? Because it's less business friendly at times, but it's actually weirdly does energize a lot of Trump's base, and I'm not saying it's good or bad. Like, I just think that he doesn't necessarily feel like he needs to change that, and that you can kind of see. Even today, for example, Ackman came out and was like, "Oh, I don't agree with this." Some of the people
because Ackman is long stocks now. Mando, Ackman is long stocks.
He's exposed.
Ackman doesn't have a hedge. Don't listen to Ackman like he's long stocks. Listen, guys, there's a lot of confusion about tariffs, and it's ongoing, and I can hear it even here. Tariff is a tax imposed on your own people. Okay, tax is saying if you import from Canada, you will have to pay 10% more. It's got very little to do with Canada. Canada will reciprocate and say to their Canadian people, if you import from America now, it's going to cost 30% more. Tariffs are an internal policy, internal to a country. Now, they do externalize things of countries involved. The problem is China has a massive deficit, and Mando hit on that. That's what this is really about. This deficit was started way long ago in the Obama era. And basically, if you look at the deficit between China and the US, it is completely unfair. China import almost everything, food, all of their soy, most of their basic commodity, food, agriculture from the US. It's 1-4 versus China. It needs to correct. And this is the only way to correct it, unfortunately. So I have a totally different view of the tariff thing. I think it's a total narrative. Once again, tariffs have existed forever. You can go to WTO.org, the World Trade Organization. They have a full document. You can read what tariffs are, what's exempt. They even say, if there's a product you can't manufacture in your country because your region doesn't have the resource, like a special tree or a truffle or some raw mineral, it's exempt. It's extremely fair. Basically says countries should manufacture what they can and use what they can and use their own markets. Only when they need to should they go outside their country and import, etc. And that was completely chaotic. It was taken for granted, that document, over the last 10 years. It's been a total mess, a shit show, if I can say that. And it needed to be fixed. So I think that this is just a massive move with aggression. It's a business tactic, art of the deal, to get everyone to the table, to renegotiate those existing tariffs, which have been there for a long time, to make them fairer, to incentivize American growth, to incentivize American manufacturing, to make sure people aren't importing things they don't need to, which the problem is what they're importing is of a low quality. That's prescription drugs, food from China, etc., from India. Not good quality, not good for the American people. It's caused obesity, depression, all of this stuff. If you look back to what it's from, poorly manufactured goods. Doesn't work anymore. We need to upgrade America. It's time. So anyway, that's my take. So read about tariffs, what they are. They are an internal tax on your own people. Okay, it's basically saying to Americans, use domestic, make domestic. If you import, you better make sure you need to. If not, there's going to be an additional tax. And that's tariffs. That's all they are. Anyway, go ahead.
I think a notable point here is that the tariffs discussed are on goods, while the US exports a lot of services, which doesn't have tariff. So I don't know. Do you guys think this could escalate? Like you say, what would how could Vietnam negotiate, or even EU, if they really wanted to hit US? Wouldn't they start talking about tariff on services, like Google's products, which don't ship steel on a boat? They are services.
I don't think so. I think third world countries are in big trouble. If America does not import from Vietnam, Vietnam's economy collapses significantly.
Oh yeah, absolutely, 100%.
That's what's going on right now. If the US stops importing from China, China will collapse. That's why China is panicking. This is how it's done. So services-wise, I think it's the same tariff. I think it's on goods and services, I believe. But it's a good question.
Oh, I think the tariffs discussed are only goods.
That's why I think it's a bit more complicated. Like, I think the first term, Trump came out and really went after China, and which they'd been, obviously talk about them devaluing their currency, but also had a lot of tariffs, came to a deal, pretty good deal, I think, in the end for the US. This is more broad than that. It's every country at the same time. And it's, for some countries, there's a clear path to negotiation, in my opinion, and in some it's less so. So yeah, it is a tax on a lot of third world countries that, quite frankly, Vietnam will never get to a trade surplus with the US, not for decades. It'd have to be a huge upending of global wealth for that to happen. That's just the nature of different countries. Like they have trade deficits. But I do think that now we're getting to a scenario where, I think this could go on for a while. I think there'll be ideally a deal with the UK. The UK has a trade surplus with the US. So does Australia, for example. The EU has always been a very high tariff place, and it would be really good. Remember, we spoke about in the show last week, if it gets to a world, which is kind of what Elon's saying, that actually those tariffs come down and we get to a lower tariff kind of world between those two potentially. And that would be good. That's kind of what Elon was saying here. But for some of them, it's going to be very, very difficult. And I think the China versus US one, I don't know if it feels like it's going to get resolved. Maybe it does, but I feel like both of them kind of have incentives for this not to get resolved.
Well, the Chinese as well are devaluing their currency, and they cut the repo rate, which is taking it down, which is making their stuff even cheaper anyway, which technically overcomes some of the tariff stuff. Anyway, let's move on with the agenda. CTO, back to you.
Let's move forward. So I think one thing that I understand the administration hope that this will lead to is rate cuts. So if we look at the poly market, we have to reload this because it has changed by the minute just before the show. So poly market bettors give it a 24% chance of an emergency rate cut. So not just a rate cut, but like an emergency rate cut soonish. What do you guys think? Do you think
it was 100% guarantee of rate cut? I think half of that is a double rate cut in June. The question is, May, will it happen? And, those months are a little bit far away. And the dual mandate of the Fed is to make sure unemployment doesn't go through the roof. Now, when company stocks go down, it rattles everybody. Hiring stops. The Fed is looking at that very carefully. And the Fed is also...
They've just declared on the Federal Reserve website, I just posted it earlier, 11:30 today, there will be an emergency closed meeting. In anticipation of a closed meeting, the Board of Governors of Federal Reserve, 11:30 today, will be held. So they're ready. That's going to happen.
That was the thing that came out. I think it's actually a regular meeting for them. It's not an emergency one. At least that's what it was said. It's a regular one. They did do emergency ones before SVB collapsed and in 2020, but I believe that it's just a regular one. So, but they may do that.
It says matters to be considered. Number one, review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. This was not planned. It's an emergency.
I think it is planned. I think there's two of them a month. I retweeted it before we went live.
Okay.
But that being said, they may come in and do something. Like the Fed is in a strange scenario here, where, like as you said, they could get inflation. But they also could get bad unemployment. He came out on Friday and was like a bit more like, "Oh, I'm not going to do anything." But at the end of the day, if the stock market's down, generally the Fed comes in and tries to help out. Which way, if it's not lowering interest rates, they could improve liquidity in the system. I reckon.
Yeah. Fed put time.
So there's definitely an element of increasing pressure on the Fed here, I think as part of this strategy. The final betting market I thought we could look at today is the US recession in 2025. And I mean, you see here, like 1 hour ago, it was...
Oh, you're moving it.
Now it's 57. An hour ago, it was 66. So it's dramatic changes, really. And let's zoom in on the day. So, I mean, an hour ago, it was like 2/3 of people who thought US would go into recession in 2025 based on their money betting. What do you guys think? Is
Q1 happen? Guaranteed negative GDP for sure because of everything that's happened. That's a foregone conclusion. The question is, will it be 2 quarters in a row? I don't think so.
And what's the implications of that, James? What does it mean?
Nothing. It doesn't mean anything. So, but basically, as I say, there's always a recession happening. you take manufacturing in the US, it's in a recession. Commercial real estate in a recession. Residential real estate in a recession, and so much more. And that's been happening for a long time. It's a stupid, crude indicator. And remember last time as well, they had 2 negative quarters, and they had some makeup shop say, well, 2 negative quarters doesn't actually mean a recession. So it's all BS, like the BLS labor data. It's all BS. They wind it down 12 weeks later. It's just, don't trust government data. Just look at what's happening on the street.
Well, don't trust the words. Just remember the words inflation, recession, depression. They're just government-invented words to cause fear. That's it. To stop you spending money.
Yep.
Go ahead.
Okay. Thanks for that. Let's move on. We had something very interesting a couple of days ago that I think is worth revisiting. We had this massive dump in the stock market on Thursday, on Friday, not on Wednesday, Thursday and Friday. And those days, Bitcoin didn't dump. After having followed the stock market 1-to-1 for months and months and months, suddenly the stock market dumps like this and Bitcoin doesn't. I thought that was very noteworthy. And I'm not sure why or what happened there. My speculation was there like a big Saylor buy, but nothing has been announced today? Or did the market suddenly start treating Bitcoin differently than the stock market, or after trading Bitcoin like a tech stock for half a year? What do you guys think happened? Now there came a bit of a dump over the weekend, but not as deep.
I just think one thing people have to always understand that over the weekend, the only thing people can sell is crypto. So if they are feeling fear, TradFi people, anybody, gold people, anybody, the markets are closed. So they'll sell crypto. And that's been going on for months, years. On the weekend, if there's any fear going into the Friday night, over the weekend, we sell off on crypto because it's the only thing people can sell. It's the inefficiencies of markets. We have to go 24/7. But anyway, that's my theory.
But what happened last week? Why didn't Bitcoin dump along with the stock market after tracking this so closely for so long? Was there some big burden buying?
Yeah. I think Bitcoin is decoupling.
Yeah, I was just going to say, we said last week that it was an in-between, a correlation between gold and stocks, right? And gold held up very well last week. Interestingly, gold started to sell off towards the end of last week and went from about 3,200 right back down to around 3,000. And Bitcoin still held up for a little bit and then did sell off a little bit then. So I think it's kind of stuck in between this correlation between gold and stocks at the moment. Yeah, you can kind of see that, right? Like that gives it a bit more clarity. Like it held up pretty well when gold was going high, but then when gold also started to dip, then we started to see
I agree with you there. Yep.
Head south a little bit there. So I think it's actually just kept the same correlation in between those two as it has before. I think this points to massive monetary stimulus still as well. Like that's my gut here. Like even if there's no trade deal between the US and China, all that China can really do then is print money. Like even today, this morning, they said, "Hey, we're gonna do more monetary stimulus. We're gonna bring it forward." If everyone's gonna dig in here and there's no deal, I still think that just means money printing. Maybe not out of the Fed because of what happens with inflation, but I think you'll see global M2 go up a lot. And weirdly, that may, again, be driven by China more than anywhere else.
Yeah, absolutely. I mean, China has begun to devalue. And I mean, even though the moves are small, we saw the Chinese market suffered the most last night watching Chinese market live. It was by far the scariest chart of all. But this is a signal to Washington, right? If the dollar's been falling, what's going up today, shouldn't the yuan be rising? But it's not. Why is that? That's a signal. So I think there's some kind of trade-weighted terms being renegotiated here, and China is probably going to have to do a massive QE, or has already started. Yeah.
About the MicroStrategy and Saylor, what do you think, James? Could there be a big buy last week, or what is happening with MicroStrategy?
He didn't buy last week. It's kind of funny. He's kind of cautious as to buys. Now they do have a thing called STRF and STRK, which are two kind of preferred shares that they sell to buy Bitcoin, and also they sometimes hit the ATM. But he waits for the right moments, and unfortunately, when price of Bitcoin is low, it's typically a right moment. But that's when the market's rattled, and that's when the market can't absorb a lot of ATMing or preferred shares. So he did not buy this week, and he's buying less and less. But remember, last week was a huge buy, monster buy. So
2 billion, right?
More, yeah, just a little over.
Do you think there's any risk? I know the answer, but just to expand on it, because a lot of people are worried. Is there a systematic risk with MicroStrategy here? He has bought a lot that's underwater here.
Yeah, his average cost is, I think, around 70K or thereabouts. The problem is, well, the good thing for them is they know how to manage risk. The second other thing is their debt is unencumbered, which means people can't draw against it. So they're fine. They can weather the storm, and they can weather a bear market, and they can go underwater like they did in the last bear too. So they're fine. They're clever. They're no dummies.
So the average price here doesn't mean that they go insolvent or something like that, right?
No.
I think that's what people are confused about, maybe.
Oh, it means I've been in MicroStrategy since 2020. It's the biggest FUD magnet you'll ever find in the world. Everybody's willing to throw poop at it.
Yeah,
Right
I mean,
after Solana.
Yeah.
the Bitcoin price went to like 50% of his average price during the last bear, right? It was at like 16, and his average price was in the mid 30s. So like that is not the important factor here.
Yeah, exactly. Well said, Mando.
Okay, then we cover that. I think the stock market is relevant to study here because it feels like Bitcoin has everything going for it now. The support of the US government, bigger than ever buys from Saylor. I read 21% of American adults own crypto now. There's 1 in 5. And it's like an enormous momentum all over the world. The only thing that's against it now is the rest of the market. Like the stock market is tanking and everyone's worried. And of course that affects every high risk asset, which Bitcoin has been up till now. So what will happen here from this with the stock market? If we can figure that out, because I think that the moment that this turns around, I think Bitcoin will run too. And because that's what's left, sort of. That's the headwind that Bitcoin has right now. And then it hasn't helped with all the buys from Saylor and President of the United States shilling Bitcoin on prime time every day. So what should we talk about the stock market? When is this turning? Mando, you have a lot of experience in traditional markets. What are we looking at here, really? Except a huge dump. I think you're muted.
I mean, just look at the date when just look at the date where that started. Just identify the date where the bottom of where this move started. It was the election day, November 4th. They've just recovered. They took back the whole Trump pump.
Yeah. This Trump headline right now, which is if China does not withdraw tariffs by April 8th, US will impose an additional 50% tariffs on April 9th.
There you go. Chinese trade deficit. It's all about negotiating a deficit or we pull out of China.
So basically, the brinkmanship here to see if they'll do a deal. I personally, I genuinely do not think they're going to come to a deal. At least US and China. I think the US can come to a deal with a lot of different countries, but not necessarily with China. And yeah, let's see how this one plays out. But yeah, like you said, CTO, this is one of those scenarios where global M2 has been going higher, gold's been going higher, and it's really a question of can Bitcoin go higher in a world where stocks potentially can continue to go lower? And I don't know, like it decoupled. It has decoupled slightly for the last few weeks, right? I personally think that it will continue to decouple and that will continue to kind of follow more gold and M2, but you're going to have days like you had yesterday where Bitcoin's down 10% because everyone's just freaking out about macro. And the volatility is going to be really, really high.
And remember, the Chinese need the US more than the US. Well, the US need the Chinese for sure, but the trade deficit is 300 billion or something like that. 250 billion. It's monstrous.
444 billion. It's almost half a trillion.
So, but you're right, Mando. That Xi is one tough cookie. Negotiating, he doesn't bend the knee like many of the other players. So that is the brinkmanship you're talking about, which could be a little bit risky.
Well, the bullish thing here is that even if I am less confident on them coming to a deal, I think the only solution for that is that China needs to literally print $500 billion of money.
Trillion more, yeah. They're going to do that.
Well, maybe $1 trillion. It's going to have to deal with that. So one of the bullish things about Bitcoin here is that you either get a trade deal, okay, and this all de-escalates, and maybe then you have a relief rally across all markets, or you get unbelievable amounts of money printing coming out of China in particular. And I think that's why you can still have a bullish view on Bitcoin here.
Yeah, and the other thing that people forget about China too is the demographic issues. There's so many alarm bells right now. They simply have very bad aging population, not enough young people, and that's why they're quadrupling down on robots too, because they know they need them. And as I mentioned at the beginning, they're offshoring to Southeast Asia because they don't have enough workers, and the workers aren't cheap enough right now in China. So they do have fundamental problems as well. They should open their borders.
Yeah, China made a catastrophic mistake, right? They had this one-child policy for the longest time.
Yeah.
I spoke to a mother, one of the kids' classmates, and she's married to the same husband, and they have a child with 10 years apart. And I asked about the story, and it was literally that. She worked at the state bank, and if you had 2 children, not only was there a fine, but you get fired from your job. So you can only have 1 child. And then when they removed the policy, they had the second child. So, and she said that that's a huge problem, because a lot of young families now in China, they were single child, both of them. So they get married, and now they have 4 old people to take care of.
Yep.
And that puts a lot of strain, because in the culture there, you do take care of the grandparents. So 2 working people have to take care of 4 old people. And she said this has become a massive, massive problem. And it's maybe not discussed as much in Western media. So they do have a big demographic problem. And this is it. They realized that change that policy too late, I think. But it's very interesting. China manufactures basically everything, and it's not like cheap labor. It's difficult to find the competence and the precision and everything to even do it in, say, Europe or the US, I think. So
yeah,
it's a massive problem, and I don't know, phones and I guess Elon Musk's companies, they must have a lot of reliance on China in different parts of the supply chain. iPhones and whatnot.
I think there's interesting game theory happening behind the scenes now. Ursula von der Leyen is all over Twitter now saying they want to negotiate. There's a $250 billion deficit with Europe, between the US and Europe, and $300 billion with China. If Europe folds, that will be a sign to China they have to fold too. They can't be the odd man out, not negotiating. What do you think of that, Mando? Or CTO, Marty?
I think there's a lot higher chance of the EU and the US doing a deal than China, just because of they have NATO, they have other things, they have common interests in various different bits of policy there. I do think that the US and China could be in this for a little bit of time here. Like you see, there's some headlines. China's going to now restrict rare earths, which is very important. There's some talk about them basically saying letting loose all the copyright infringement stuff that they've tried to contain, or they say they tried to contain over the last few years. And then the other big one is Taiwan. Like they could invade Taiwan, and that would have an impact on Chinese semiconductor on the semiconductor industry for the US. So I just feel like that one could simmer for a lot longer than some of the others.
Yeah, in my opinion, I think it's all about China. Personally, I think this is all about China. This is the US and China trading balance. It's been cooking for a long time. And this is out of the deal. This is how Trump gets things done. This is his style. Threats, end of the world threats. China has more to lose. They're being stubborn. They'll come to the table. The trading balance is very unfair. They need to drop it at least half so that there's a little bit more balance. And I think it'll be sound. I think these deals will happen faster than you think. I personally don't think these will drag on much longer than 30 to 60 days.
I think 100% there's an element of negotiation here. Definitely. Come out with tough tariffs, bring everyone to the table, try to bring it down. 100%. Then the only thing I'm even more sure about is that Trump is not going to end 4 years of presidency with the stock market down if there's anything he can do to avoid it. So he will, do anything, like love Trump or hate Trump. Everyone agrees that he does have a bit, quite big ego. So that scenario just doesn't exist. He's going to cut everything, forget about the tariffs. That's what needed. Do anything to make the markets go up, I think. So I'm not worried about that. I'm not worried on a 4-year horizon. I think they would do anything to bring the markets up. Short term, I don't know. I don't know how long this negotiation will go on. I do think that there will come to some agreement and find some reasonable solution to all the tariff situation. I do think so. That's beneficial for the US. And I don't think beneficial for the US simply isn't to manufacture everything in country. That's just not possible today. I don't think, even with robotics and everything, it will get so expensive. Like a Vietnamese factory worker, I checked the numbers, they work 48 to 60 hours per week, and they earn $300 per month. So that's the cost of labor for Nike today. And yeah, probably, you can cut some cost with robotics and everything. But that's going to take time to build. It will take years to perfect those processes and robots and install them and build factories and everything. That's going to take forever.
And fun story, I had to hire a guy on Saturday to repair a fence, $700 a day. And he only does 6 hours, $700.
Exactly.
And he's just hammering nails and wood. That's it. So it's not skilled. Anyway, let's move on to some crypto stuff. One last thing I do want to say about the stock market, though. We are way under the 200-day moving average in the S&P 500. And that doesn't stay down there for long. So you're right. And the other factor as well, from looking at history, the faster things fall, the faster things rebound. So that's been my observation. Be ready. All right.
Let's talk about some crypto and some altcoins. Should we... Have any of you followed this Genius Act discussion with USDT? I don't have so much to add. So
Marty
not
has.
Sure. Marty, did you follow that?
Yeah, I speak to Paolo. It's pretty clear. I mean, it's a pretty similar situation to the micro rules in the EU. If the US Genius Act is signed in as it is right now, then current USDT's backing will be insufficient. And so they'll have to create a US-specific USDT version, like they did in the EU. And they're ready to do that, no problem. So we'll see what the actual text of the Genius Act demands with regards to the collateral, whether it has to be, a certain percentage in short-term treasuries, a certain percentage in bank money, et cetera, and those rules are still being hashed out between the two parties. It's sort of a bipartisan thing. And once the Genius Act is actually written up in its final form, we'll know, Tether strategy. But I think, once again, Paolo is in the White House, is with Lutnick. They'll work it out. But the current USDT, absolutely, there's a chance that it's not compliant in the US, depending if the US signs the Stablecoin Act to MiCA, it won't be compliant. Same thing as Europe. But they're ready to create an American stablecoin. But what it does say is that USDC is definitely the chosen one right now. Circle.
Yeah.
You'll saw Circle announcing the IPO, making big inroads in all kinds of things, government. So Circle seems to be the most compliant. And but current Tether, with their backing, won't be compliant. But Paolo is very open to create a US compliant stablecoin. But just understand, like everything, nobody really knows. The rules aren't set. So once the rules are set,
amazing lobbying by Circle here, because I presume if that happens, they're going to take massive market share. And just for everyone's up to date, USDT is delisted now from European exchanges. It's gone already.
Yep, Circle's going to take over. And the other thing that's interesting is, when you look at the VCs right now, guess where they are investing in crypto? They're going all in on stablecoins because they know what's coming. That's big money.
That's huge. Let's move on. We have shocking developments in Ethereum. And I don't know, I guess the Trump sons should have watched a little bit more DCA shows, because
2018
Ethereum
levels.
is now back at January 2018 levels. January 2018. I have to think now. That's 7 years ago. 7 years ago, Ethereum is hitting the same price. So top buyers in January 2018 are now at the same price point. And I mean,
7.4 dominance.
Yeah. And
it's crazy.
I don't know, but a lot of things have been difficult to analyze this period, but this is not one of them. This is not one of them, guys, for the past year or so. This has been and still is a straight line down. ETH to BTC, straight line down, uninterrupted. And ETH USD, even though Bitcoin had this enormous rally, made a top pattern and went into downtrend. And this has not been in any way unclear. But of course, Solana has also taken a major beating. But if we look at the SOL to ETH relative strength, that has not changed now. It's still the same. It kind of has followed this channel after, of course, Solana had the massive run up, and then they went into this channel where Solana has gained relative strength on Ethereum very consistently all the way since 2023, basically. And before that, of course, Solana gained much faster. So I think it's important to see that in this light. But of course, SOL has been down a lot also. And what's your take on SOL here, guys? James, do you want to?
Well, it is a wicked, I don't know what you call that, a mini bear market. But either way, I look at it in simple terms. If it goes back to all-time high, it's a triple. And that's rare that happens at this stage of the bull market. So this bull market is quite different. Drawdowns are brutal. Bitcoin's been holding up pretty well.
Yeah, it has. It has.
Mando, what's your information about Solana, if you want to know?
Yeah, Martin, you can go ahead.
A couple of things. I mean, obviously, we're all aware from January 12th, I started tracking a lot of selling of Solana from through the market maker out of London called Wintermute. They have offices all over the world. And, and it was coming through Binance. And lately, last week, we found evidence that actually found the original court document from the FTX bankruptcy that appointed Wintermute as the market maker to execute the selling of FTX bankruptcy assets into cash to pay back creditors. And so it appears as if Wintermute was selling off Solana to go into cash to pay back creditors. And it started around 300. Yeah, 300 down to 100. So, there was a very extensive selling pressure from that. And it's all, once again, historic coming from the FTX bankruptcy. But still, it remains 2.23% dominance, which is quite amazing. Once again, I said yesterday, I think the resilience of these assets is spectacular. And now we have to all turn our heads to the way markets correct is, everyone goes in, there's an event, there's panic, everyone goes back to stable coins or to fiat. And then when the time is ready to move back in, everyone reallocates differently. That goes for BlackRock, sovereign countries, the Fed themselves, people on the streets, you guys. Your decisions about where you put your money in again the second time are not going to be where you were before when you sold. And I think what we're seeing is less money will go into Ethereum. I mean, it's at 7.65 dominance right now. More money will go into Solana, holding its 2.23% and being a stable coin king at this point. So I think what we're just seeing, rebalance, everything, the waters go out of the bay and then the waters come back in the bay, but it's a very different setup as to which assets are going to get the capital. And that includes the stock market. I think you'll see a giant rebalancing. That's what I call it. And that's very much part of a bull market. This is a bull market pullback. Remember, 10% on the stock market is a typical bull market pullback. And crypto saw around a 10% pullback as well. So I think this is just a great redistribution. And nothing but positive news coming out of Solana. On the other hand, Ethereum, nothing but negative news coming out of Ethereum. They delayed their thing. They had all kinds of issues on the test nets. I Charles Hodgkins yesterday talking about the origins of Ethereum. We spoke about the actual days when Ethereum was invented. It was spectacular. The people in the room at the time, the thoughts, when they left, what they did. And there were issues in Ethereum from that day that were never solved. So I have a lot more information I'll slowly start to be sharing around this. I don't want to hurt too many feelings, but there are reasons for Ethereum's decline, and it's not totally market-driven. There are issues. Anyway, that's my uptake. Also, Sui Walrus came out last week. I don't know if you guys saw it. It was pretty much the most resilient of all the micro coins. It barely moved in this dump. I thought that was pretty spectacular. That's Walrus on Sui. That was amazing too to watch. There you go.
Okay, we have a hard stop in a couple of minutes. Let's take one more agenda point, because for many it's been a very tough period. First time maybe experiencing this kind of drawdown. Let's share some tips how to survive these situations, because I guarantee you it won't be the last. James, do you want to start?
Yeah. So one of the things that scares me the most is people throwing the towel at the very worst time. They panic sell the bottom. Don't let that happen. And as we always stress, when markets go to new all-time highs, that's your signal. This very crude caveman signal, but I've been using it my whole life. That's when you start either stacking cash or taking a little bit off the table and, get ready for the downturn. Because the downturn's coming. You don't necessarily know what will cause it, but after an all-time high, there's always mean reversion. Everything mean reverts to the upside and to the downside. So be ready for that. And just one final point on tariffs. An easy way for people, and shout out to Sean Donnelly here and Team D Tesla, who understands soccer. And Mando, you probably understand soccer too. Where did we lose CTO? There he is. Should everybody play by the same rules? Or should Germany have different soccer rules when they play the United States or France or China? That's a very easy way to think about the calculus of what this is all about. The rules are not fair and they're not equally applied. And it's not a political statement, but it's a crude analogy. Compare it to sports. Then you'll get it. Final note for me.
Very nice.
Mando, you want to share some tips how to survive these kind of drawdowns? You muted.
Yeah, I mean, I've been trading for a long time. Probably not as long as some of you guys, but yeah, this is a super volatile market. Like, don't be. You can forgive yourself for getting caught up in it or refreshing the prices all the time. Like, the volatility has been fairly wild. I would say for the last month or two, I definitely did not time the top, but moving into an asset which you want to hold throughout a potentially a chop or downward period is not a bad move. For me, that was more Bitcoin based. Before that it was more JLP, but has been more Bitcoin. But know that you have you want to hold an asset or want to buy more of it on a down day is quite a good thing. So make sure you have full conviction in your bags, and then potentially have a game plan for the volatility. So I even think you can trade around the volatility a little bit, even with like 10 to 20% of your bag. Have set orders 5 to 10% below. And similarly for above, like you can trade around this sort of, even today, right? We went from 76K to 81K basically in 20 minutes. Know that happens a lot in these sort of a sell-off. I'm pretty bullish at this time, but still really, the one I feel most confident about is Bitcoin. Just because of what I just said, where I think that even if there's a sustained trade war, global M2 is just going to go absolutely wild. And I think in that world, we do well, and probably so does things like gold. And but I'm less certain on some of the others. I think you could be holding those, and it's difficult to know where the bottom is if some of the activity continues to dwindle. Like they'll be the first to go parabolic on the way out, but I've been less certain on some of the L1 trades since activity started to dwindle across them.
Marty, some tips how to survive this crazy drawdowns?
I'm a technical investor, so I focus on the technology, the use cases, and I invest to maturity. I think that's something people have to learn as well. They're VCs in crypto. You're an early stage investor. These are all speculative assets until they actually prove what they're trying to prove, right? And nothing's really proved what it's trying to prove except Bitcoin and Solana and Ethereum. They've actually solved problems and are being used. So you need to hold them to maturity. That's the first problem. People just bail out. The second thing is they don't focus on the technology. They just look at charts and analysts and influencers and make the decisions like that, and they will always lose their money. Learn the technology. If you invest in something, understand it, understand its use case, its business model, the maturity indicators, the signals, the targets, the regulation, and play the game correctly. And then you exit at the end of QE. You don't exit in quantitative tightening. Okay, anybody that is exiting right now, you're literally exiting a speculative asset class that you've been holding in the bottom of the Federal Reserve's quantitative tightening process, literally when they've sold their entire balance sheet. This is the worst time to buy, to sell. This is the to buy. Okay, you buy now, you run as they add liquidity. There's always going to be a crisis. There's always going to be a crisis. I love crises. Why? It lets new people get in. So new people to crypto, welcome. You get Solana at 100. You get Sui at 2. You get Bitcoin at 75. You're at 100 going, should I buy at 100? If you bought at 100, you'll learn. You won't do it again. Be patient. Learn that crises will be created and there are opportunities to get in, increase your bag, or get in at the bottom. And use low leverage, high leverage traders. I hope you finally learned your lesson. There's some record liquidations this cycle. Just don't play with high leverage. The house is stacked. You have no way of winning. You will lose your money. Low leverage only, spot buying, hold to maturity, take advantage of dips, expect corrections. Now, in hindsight, we all should have sold the Trump announcements. Obviously, the top, we should have sold it, and everyone's kicking themselves going, oh, we were so stupid. We thought that, the Trump pump would go on forever. We should have sold the top. And that's part of trading. Just learn from that mistake. It'll happen again. Like I tell people in my community, there's always another trade, people. There's always another trade. It's not over until it's never over.
So, thank you.
And keep dry powder, like James.
Yeah, definitely. So the only thing I'd like to add to those, because you summed it up very well. Most people do the same mistakes. They buy at the euphoria, which is at the top, and they hold it all the way down, and then they sell it at the depression, which is at the bottom. It's better to do the other way around. Secondly, I would like to add this concept about position sizing. Like when the market is easy, you can have full position size, more exposure. It's difficult, and you have no idea what's going on. You have no idea what's going to happen tomorrow, and everything is very uncertain. You don't need to put in all the money in either direction if you don't know what's going on. You can have less position size. Warren Buffett put more cash, maybe because he feels he didn't know really what's going on. Turned out pretty right. So the concept of position sizing, when you are more certain, you have more exposure. When you are less certain, you can have less exposure. Like, for example, right now, I don't know really what's going to happen. I felt if they would have delayed the tariffs today, I would have said 100%, okay, go all in here. But they didn't, so I don't really know. Maybe this negotiation, this turmoil might continue for a while. And I don't really know. So that's what I would like to add. Second, you don't need to hold through the downtrends. Bitcoin, Ethereum, Solana, whatever your favorite coin is not going to go to 1 million with the trend up. So that's another way to kind of contain your losses if you have been wrecked. Any other final words, anyone?
Stay healthy, stay strong, keep the head in the game. This will pass.
James, what's your thoughts on the XAI, the Elon Musk move? Did you see he wrote off the X acquisition entirely and valued X at 33 billion now? So he actually made 14 billion on the deal, what everyone thought was the worst deal of all time.
And then he played video games.
When I read that, I was like, James must be loving that.
Don't fade the best capital allocators on earth. Watch them. study them, watch the winners, and there's very few of them. You can count them on two hands, maybe one hand. Follow them all: the Stanley Druckenmillers, Paul Tudor Joneses, the Elon Musks, the David Saxes. They all know what's up. Thank you, everybody.
Thanks, guys.
Thank you very much. Remember to subscribe to everyone. Links below on all the forums and channels.
I believe the bottom is in. That's the final message. I think the bottom is in. Looking at the Chinese stock market, I think we're going to bounce.
Awesome. Good to see everybody. Good to see you, Mando, Marty, CTO. Thank you all. Happy weekend.
Guys, brilliant show.
Good
Thanks
week.
a lot.
Thanks, guys.
Thank you all very much.
Yep. See you next week.
Take care.